This is episode 1 of Trading Bot Sessions, where we talk with traders who have built automated trading strategies and trade everything from stocks and options to futures and crypto. John and I speak with Zach, who goes by the TheIceKing in his trading community, SmarterOptions. And we cover Zach's story, his road to learning PineScript for TradingView, his journey to building an automated trading strategy for micro E-mini S&P 500 futures, and finally, how he's navigated through slippage, scalping, and data inconsistencies. I trust you'll enjoy this kickoff episode of Trading Bot Sessions with Zach. All right, so why don't we start with just the top question here? Why don't you tell us a little bit about yourself and how you got started with automated algo trading?
So my name is Zach. Own a small trading community called SmarterOptions. Been trading for over 20 years, or about 20 years, I suppose. Really had not pursued algorithmic trading, just mainly because I couldn't find anywhere to do it. You guys are really the first ones. I mean, TradingView is this great platform that they have out there with all these tools, and it's hard to get to take automation from there into a real life trading account. That's how I found you guys, and that's how I got into algorithmic trading.
Do you have a process for developing and testing new trade ideas, or do you have just a specific strategy that you're running at the moment? A combination of strategies? Maybe you can talk to us a little bit about your approach, the markets that you're trading, and what you have running at the moment.
Absolutely. So I do have, oh my gosh, if you guys knew how many iterations of algorithms I have, it's absolutely ridiculous. I'm very all over the place, right? I mean, my mind's always running. I'm always reading, always getting ideas. There's been times where I've been working like on 3 different algorithms at once, playing with different features and trying to add different, little niches and knacks into the algorithm. Main thing I'm trading right now though is futures. The reason I'm trading futures, I'm trading futures, one, because MES and ES are the two that I'm focusing on primarily. 1 point for MES, $5 in your trading account. ES, $50 in your trading account for 1 point. What's nice about that is, not to say like scalping, but I mean, 10, 15, 20 point moves are rather significant compared to trying to do it with stocks. Another problem with stocks that I found is gaps. I mean, the market only trades 6.5 hours, regular trading hours, right? It's very hard to adjust to something that can change overnight when the market wasn't open, especially if you're trying to do options. Something bad, if news comes out that alters it, and things happen in pre-market, things can go awry before you have a chance to fix it. So futures are nice because they trade 23 hours a day, 5 days a week. It really helps with the algorithmic trading, in my opinion, doing futures. If you're going to do options, which I'm just starting to alter some of my algos to try and work with that, you just have to work on larger time frames and further out targets. That way you have time to let it happen. But yeah, so using PineScript, I have never been a programmer before. This last couple years, I have watched so many YouTube videos. I've pretty much taught myself how to PineScript to build these algorithms. It can be frustrating, but John has been a big help every time I have a question. Not with necessarily programming, but how your guys' operation, how you guys interpret the signals and stuff. He's been extremely helpful with that. And yeah, it's my current strategy. If I were to look at it here, I currently have it set to trade it's trading 4 MES on this one particular strategy. This is the backtesting results, but it's the one I'm running. It'd be up $9,300 for this month, or since September 1st. If I went back to August 1st on this particular strategy, it would be at $15,465 up, with a max drawdown of $1,000.
That's great. Good risk reward.
And that's a good point we just said right there, right?
Mm-hmm.
all about programming in risk to reward, and you got to have that built in.
Were these strategies developed on a discretionary approach that you've taken in the past, manually traded, or have you started to find ways in which you can manage risk differently with a programmatic approach?
Yeah, that is the hardest thing, is to try and program in how we actually trade, right? So I mean, if I'm looking at MES right now. Yesterday, right at the market close, or, right when futures closed at 5 p.m. Eastern, I looked at it and thought, okay, go short right there. But that's just from visually looking at it. I mean, I could see a ascending wedge, and it looked like it was overextended and it needed to pull back. My algorithm didn't pick it up until this morning, right at about 6 a.m. Eastern, and it went short. But it went short a whole my algorithm went short at 37.77. I would have personally gone short at 37.97. So it missed it by 20 points, but it still did well. And then it exited on the bounce and went long coming back up. But yeah, so to answer your question, I don't know how to program in quite exactly what I see yet, but that's what I'm working on every day, trying to make what I'd really like to get into, and if there's anybody out there that wants to reach out to me and collaborate or something, but eventually what my goal is to build something that can do like a thought process tree, if this, then that type of logic. I'm just still learning on programming PyScript to get there.
More of a decision tree then?
Yes, yeah.
And so what advantages or disadvantages have you found so far with algo trading in futures?
So disadvantages being news-driven events for sure, right? Especially with feels like the market makers. I mean, how many times and I'm sure you guys have noticed it, I've noticed it. I mean, I can't tell you how many times going in a news-driven event, they will spike it the other direction real quick before letting the real outcome come. And it looks like it's possibly to fake out the opposite direction, whether that's long or short, or possibly to go up and hit a bunch of stop losses before letting it actually run down. So that's probably the hard part. The good part is that it takes the emotion out of it. It trades 24 or 23 hours a day. I don't have to be awake or necessarily even watching it to take these signals. And that's probably the biggest advantage to algorithmic trading, is that one, it's relying purely on the signals, no emotion to it, and that it trades. How many times have you got to look at a chart and like, oh shit, that looks so good. I knew to take it there, but I wasn't, around at that exact moment when I would have seen that setup. So that's probably the biggest advantage to it.
Would you say that turning on automated strategies has changed the way that you interact with the markets on a daily basis, or do you still find yourself engaged, highly engaged?
Oh, I'm still highly engaged. I love this stuff. This is hobby, passion, call it what you will. But I'm, like I said, I'm a student for life. I'm always reading, always trying to learn more. The market is so fascinating with how it moves, what causes it to move. I love every minute of it.
So you mentioned earlier that you spent a lot of time on YouTube trying to learn PineScript. Can you tell us a little bit about some of the challenges you faced in heading down that path, and what resources you may have found that have been helpful?
Yeah, I don't really know what resource. I think the biggest resource that's been helpful is, once I got through kind of learning how to code a little bit, is PineScript. There's a bunch of open source strategies out there, and I started just looking through them and just kind of figuring out what functions did what. Started teaching myself how to code. The current algorithm I'm running is 100% coded by me. It's not even a single piece of it comes from anywhere else. But I did learn a lot of going through other strategies and other open source to try and figure out how they were coming up to certain things. One thing that I've done is I'm I'm trading on lower time frames from higher time frame signals. And so one of my first mistakes was repaint issues. If you're trading off of a higher time frame, if it takes a signal, but by the time that future time frame closes, if that signal is no longer there, right, it would repaint. Repainting is, for anybody who doesn't know, is when you get a signal and then it gets erased later because it, in that moment it was, a valid signal, but by the time the candle closed, so say I'm trading on a 5-minute chart, but I'm getting signals off the hour chart, if 10 minutes into the hour chart, a signal goes long, but by the end of the hour it closes, it's no longer long, it would repaint that signal. So I had to get through that. Repainting was a big one for me, figuring out how to get past that and around it.
How long do you think it took you to have your first version of something working? And, for context, that helps people understand a little bit about this journey of not only learning PineScript, but really assembling an automated strategy.
I'm not sure you want that answer.
Sure. Let's be realistic.
Let's be realistic. Literally, I have, I don't even know how long it quite took me. Over a month of learning the PineScript and before I got something. And then my first one was repainting, and I didn't even realize it at first. Like, it was probably several months before, but like I said, I had zero coding knowledge. So it took me a little bit longer. Let's just put it this way. I have found out multiple times now that you can only have 75,000 characters on PineScript in a single script.
So I asked that question because we get a lot of traders, who have kind of improper expectations. And just like anything in life, whether you're programming for a professional job or maybe you work construction building houses, like no one just picks up a hammer and all of a sudden they're an expert. And it's no different with algorithmic trading or manual trading. And that's what we found is one of the most important things, is kind of level set expectations, and people need to expect that there's going to be an investment that needs to be made both in time and potentially money, investing in resources, buying resources, buying strategies to look at as examples to follow. And, paying a friend of mine always calls it paying the stupid tax. You got to pay your dues in order to get through to the other side. And most people give up before they can kind of get through to the other side.
Yeah. If you don't have the will, I agree with 100% what you just said. We compare it kind of to, we get a lot of traders that have come into and gone into our community, and they think that options are just a get rich quick thing. Like, it doesn't take, anybody can do it. And it's just like during COVID when everybody thought they could be a day trader. I mean, it's so easy. I watched this guy on YouTube and he made $100,000 a day. It's so easy. Okay. Yeah. It's awesome. I mean, don't get me wrong. It's a lot of fun. I love it. I'm addicted to it. Having said that, it's definitely not easy. You gotta, just like anything else, lottery is probably the only way to actually get rich not trying, right? I mean, you don't just get rich by, or get good at something just half-assing it or trying to watch someone else do it. I mean, you have to take the time to learn and figure out what you're doing to make things happen. But when you do, it can be a game changer.
So you mentioned earlier that you spent, roughly 20 years in markets, and for all that time, I assume that was all manual trading, maybe a mix of investment styles. Can you tell us a little bit about your journey as an investor and or trader and how that's evolved over time?
Sure. Just like everybody else, I imagine started off pretty simple beginnings, right? Investing in some stocks, you get into options, but the more you learn and you read and you get into options, I mean, you can really, it really changes the way that you think about trading. One of my things, which I wouldn't recommend doing it right now because this market is so choppy, and I mean, unless you're doing puts or something like that long term, but when you buy options, right? And if you're not familiar with options, you have to go read about it a little bit. We're probably not going to get into deep. We're going to teach you everything about it right now, but you have intrinsic value, and then you have time value, right? Well, as you buy deeper money, if you ever watch options flow or you go to any of that stuff, right, you see a lot of big money buys options deep in the money. And a lot of people don't understand why they do that. The deeper you go in the money, time value goes to almost zero. So you can buy actually, I mean, I could go buy leaps of stock about 50% in the money, and I pay very, very closely to what the stock is actually at. The benefit of that is that if the stock market if you look at any 10-year span, traditionally it's gone up 10%, 10% year over year average at any span you look at. Well, if you were buying deep in the money options, I could buy twice as much with the same amount of money buying leaps and get those same returns, except 20% returns, just by buying deep in the money options on the same stocks. Now, you also get dollar for dollar, or you also get bigger losses when the market does correct, but it's a longer term strategy. But yeah, I started doing that, buying things that were out. Actually, you know what? We had one of my traders. He kind of went off on his own now, but God, he turned $50,000. He shorted a bunch of Shopify when it was at $1,800, and he turned that into $500,000 here in 6 months because of the fall. That's the type of thing you can do. Now, he was patient. He didn't take he sat there and he was trading off long-term signals, and he just let the puts sit there and accumulate in value, and he's done very well. And like I said, he chose to go off and do some other things with the money that he had made himself. But the more you learn, it will definitely change the way you trade.
Given the history you've had with options, can you what's the leap that you've made from options to futures here with the automated strategies? Is it really just a difference in the way that you're taking these trades?
Yeah, I mean, like I said, the nice thing with futures is that they trade all the time. I mean, I originally got into futures because just like everybody else, life gets busy, you have other things going on. Futures is nice because it trades all the time. If I want to go get on, so say you have this is just a generalization, but say you have a full-time job, but you want to trade and you want to make some extra money on the side. Futures is a great way to do that. You can go trade futures in the evening, find setups and trade at night, make some extra money in the evenings. I mean, it's just another great investment tool or avenue that you can take to kind of increase your knowledge or the broadness of what you're investing in.
Yeah.
I still have options. Mostly I'm trading in, I do some shorter term options, but my favorites are swings and leaps. And I, not too long ago here, just a couple weeks ago, the last time that Russell, the IWM was up, I think about 68, or 168 puts or 350, and they were at $15 a couple weeks later. I love that stuff, but I don't like scalping. I like longer term strategies, and then doing spreads, just smarter investing.
Mm-hmm.
But futures is just another avenue. I mean, futures I have found, as far as me finding something that I can get good returns on regular basis period of times. I like that for algorithmic trading. Like I said, there's no gap ups, no gap downs. It just trades all the time.
Not to mention there's no PDT rules or, no wash sale rules. You don't need the minimum 25K. I think it is a lot more accessible from an algorithmic trading perspective. So you mentioned there around wanting to take more approaches on longer term strategies. Are longer timeframes more appropriate for retail traders from your perspective, and why?
Well, I think so. I mean, this market is so choppy, things are going every which way. It's hard to get signals in this particular market. I mean, I've never seen this before ever. But scalping is just dangerous. Scalping is I feel like guys are gambling. People that have that gambler's mentality, they don't have a reason for doing it, or they think, or they get this gut, and like I said, and then this market has just been so extreme. I mean, hell, just look at yesterday, right? We had all these gap ups and the market was so green. I personally bought a bunch of puts yesterday and cashed most of them out this morning, but everything was, showing bearish divs. It was all up. It all looked like it needed to come down and retest support. But the longer term strategies, I think, are just safer bets. Buy time, and the signals tend to be more reliable. That's why I recommend looking at higher time frames. And then, like I said, and then you can kind of gap ups and gap downs don't matter so much, right? As long as your longer term signals are still validated, you stick with it.
With both manual trading and automated trading, is less more? Many beginner traders that join our platform, I think, tend to make the mistake of thinking that they have to take dozens or hundreds of trades per day in order to capture some kind of profit from the market. And maybe part of that comes from the assumption that that's how the high frequency traders do it, or that, that's how the institutions do it. And I think the takeaway here in general for us and for many of the people who are successful at doing this is that the longer time frames are where the trend shows up. But I'm curious about your viewpoint on that.
Yeah, no, I completely agree. So, I mean, so if I go look at my algorithm that's running right now on futures, this since September 1st, it would have had, hang on a second, 90 closed trades. So, I mean, it's taking an average of 3 trades a day. It's not, I think you're really right. I think what people miss is when you look at back testing results and you see these charts that just go, I mean, there's just a nice vertical line, right? It's really important to go look at your average trade. I mean, if I have an average trade of and it's trading, making a profit of 25 cents, I've got no margin for error, and I'm probably going to get murdered in fees at the end of the day. It's unrealistic. You need to find strategies that get, so like the average trade on mine when taking up to 4 contracts, it takes anywhere from 1 to 4. The average trade is, $104 profit. It's showing me here. I always try and throw in, and you have a slippage setting on there. I try and add in some slippage just to make sure that doesn't change my results dramatically. Because if it does, well, that means that I have a zero tolerance for error, and that's an issue also. These fast moves, you got to make sure that, that you're, that's another reason I like trading futures also, by the way, is it's so highly liquid, right? I mean, there's never more than a half a point gap between the bid and the ask. That's one of the reasons I've also chosen futures for algorithmic trading. But yeah, no, I think less trades, less is more, and you need to find something that is consistently profitable taking less trades.
With the real trades that you've taken, what kind of impact have you seen slippage and commissions have on your strategy? And maybe, the lag of time of signal and time of execution, does that affect your performance at all of your strategy?
It has, but I've found that it goes both ways. So I mean, the long, it went long here a while back. I mean, it actually went long right, at the start of a red candle, and so it had 5 tick slip, but it was actually in my favor. Sometimes it's the other way around, but like I said, on this particular strategy, if I put in, an average of 5 tick slippage, it's still profitable. And that's what I'm watching for. That's one of the things I'm looking for. I've also been talking to Jonathan here about adding in a way to help reduce slippage. And so we're working on that right now, or, he's helping me come up with a solution, or I'm helping him, whichever way you look at it, a solution for that right now. But I think that'll help a lot of it.
Yeah, maybe we talk about that a little. I assume that in the event that you're talking about, where the trade went in your favor, it was because the limit order had best execution tied to it. So you actually filled at a lower price than you expected on the buy, right?
Yes.
Gotcha.
Well, I mean, it's not limit. I'm doing market entries.
Yeah. Part of the issue is that when you wait for the target price to trigger in TradingView, and then TradingView sends a signal to TradersPost, and then we send a market order to the broker. But a lot of times
set it down.
Yeah, and you just get it because it's a market order, you're just at the whim of the market. So we're going to add a feature that lets you optionally send the take profit and stop loss price ahead of time with the entry, so that that target and that stop loss will be in the broker as a limit for the take profit, and stop market for the stop loss, so that you're not getting hit with as much slippage on the exits.
Yeah, so my entries will still be market. And the reason for that is the same thing. I mean, so if candles start to rip up, I don't want it to send I don't want to wait for a limit order, right? Because if it sends a limit order and it's on a whole green candle, it'll just never fill. I never got to be in it. So I'm willing to talk to Jonathan. I think slippage on one side is definitely acceptable, but if we can reduce slippage on the exits, and like I said, all my triggers, I have different triggers set up on my algorithm, and then I have different points targets for each trigger. But at that time, I could actually, with the alert, I could have it send in what that target is, and if he could just have a limit order, a limit exit created at the time that the order was taken, then it doesn't have to wait for the lag of TradingView to send the market exit, right? The exit is already set as a limit in the system.
Are there any type of news events or days in which you don't let the algo run, or do you intervene at all?
You know what? Each time I've intervened, and I just did it this week. I mean, actually my algorithm is so I turned it off this week because I was messing with it, and I was took a little bit of a loss the other day, and so I was like, I'm gonna turn it off for a minute. I was playing with it, and I missed out on about $1,500 profit because I had it shut off.
I found that like you said, it can go both ways. You have sometimes where the news goes against you, and then you're just sometimes on the wrong side, or sometimes you're on the right side, and backtests don't intervene. So I found it's the whole point is to kind of get you out of the middle. But it's always easier said than done, that's for sure.
Well, like I said, I just need to trust it more. I mean, it's still, you get that emotional thing, right? I mean, it is one of those things where you just, you see something happening, but yeah, I don't know. Like I said, I saw it going down, and I had it, like I said, I had $1,000 max drawdown. I lost that last week, and so I was like, oh, I'm gonna turn it off. And then sure enough, the next trade would have been a winner. I should have just should have just stuck with and let the algo do its thing. I mean, that's the whole point of it, right? Is to not be involved in it and to let it trade. I still do my own personal trading on the side, but the whole point of doing algorithmic trading is to have a fairly consistent, just passive revenue stream. And that's what I need to let it do. And I think the biggest way to do that is once you find something that you think might work, you have to be okay letting it. I mean, you can't turn it off after it loses once or twice. I mean, it will lose sometimes. It's automated. It doesn't know anything more than what you programmed it to see. So it can lose. But the point is that, is it, consistently profitable? Do you have a profit factor that's worth leaving it on? And then you watch your max drawdown and just make sure that that's an acceptable tolerance for you for what you're trading. But you can't just lose a couple and then be like, oh darn, I failed, and start crying about it. You got to let it keep going. I said my profit factor for this month would have been 3.4 if I would have just let it keep going. Instead, I'm below that now because I turned it off for the start of the week.
So maybe a couple more wrap-up questions here. What is something in the future that you would like to continue learning about that you think would improve your approach to algo trading?
My biggest problem is with TradingView and trading futures. It's hard to go back and get an accurate back test of anything back more than a few months starts getting tricky, because contracts expire every 3 months, and you start getting skewed results that I don't think are real. But part of it's because it's looking at other it's trying its best to stitch some of the contracts together, but it just, I would like to get
The backtesting feature of TradingView didn't help with that at all. Or not factors.
No, because the history of the futures contracts expires. You only have a certain window.
So when you do it on a continuous contract symbol, it doesn't work.
It does kind of, but then here on, a month ago when they switched to December futures or whenever that was, maybe a few weeks ago, if you go to continuous contract, it shows a gap up. That gap up's not real, but it shows it. Like I said, it's just doing this continuous, this stitching thing, and the volume's not always right either. I mean, because the volume was split up between two different contracts for a while. So,
That's something TradingView can fix. Like, is that fixable? Like, could someone build a system that allowed you to properly backtest futures over a longer period of time?
Well, that's a problem too, right? I mean, so I'm zooming in. I mean, ultimately, my program is based around, I have all my stuff based around the 5-minute charts. Now I've figured out a way to use longer term signals, and like I'm trading off of 1 hour signals, but I'm using a 5-minute chart. I just did that by the signals, the technicals that I'm using, right? I just multiply them by 12 to give it close to 1 hour results. Now it doesn't line up perfect, but that's how I'm trading off the 5-minute chart with 1 hour signals. But by using 5-minute candles, that's another problem with TradingView is they only let you look at so many candles. So at the 5 minutes, I'm only able to go back a couple months. So really, I've looked at other ways to do that. Sounds like there is some other, using Python and some different things. I could buy the data and then try and convert my Pine script into a Python script and back test it over just the raw data. But once again, beyond me currently.
So can we hear a little bit about Smarter Options and how people might be able to get in touch with you?
Yeah, so we're Discord trading community, SmarterOptions.com. We have, I'm a stupid Discord name, TheIceKing 9156. If you guys want to hit me up. In the TradersPost Discord also. But yeah, we do, options, futures, chat, do technicals, draw it on charts, what we're seeing, what we're looking at, why we take things, entries, exits, all that good stuff. We have it available where you can get alerts through SMS if you choose to go with an SMS plan. Or through, just the Discord. But we're a pretty small group. We don't really actively advertise or try and grow. It's just more of as people spread the word type of thing. So, but we enjoy it, and it's not really, it's not like really a moneymaker type of thing. We just do it to help educate and have a like-minded group of traders.
That's great. Well, I appreciate you spending some time with us here on this. Yeah, I
All right.
appreciate it, Zach. Really, this has been awesome.
Yep. All right. Thanks, guys.
Take care.